All right, what is up, traders? What's up, tycoons? Super excited for today's video. Starting the year off with a bang, a big bloody red day today. Apple down 4%. But there's some important things that we need to talk about. And the first thing we got to talk about is you can't trust what these banks and analysts are predicting for 2024. Let's just make that very clear. So whether it's a bullish prediction, whether it's a bearish prediction, look at how wrong they were on 2023. Okay, everyone's price targets, all the banks, was from 4,300 down to 3,725, and the S&P 500 closed at 4,770. So just take everything that you're reading from a lot of these banks and these other things with a grain of salt. Okay, at the end of the day, they have a narrative that they're trying to push. Okay, and it's very reasonable that a lot of them were pushing this narrative because they want to just manage funds, right? They get paid to manage funds, and why would they take risk for investors whenever they could get a lot of money in cash, right? Bonds were finally attractive. T-bills were finally attractive because of the inverted yield curve. And so it was much easier for them to pitch to clients, hey, don't take any risk. All right, look, this is what our projections for the S&P 500 are. They're not even that good. Just put your money in cash, put your money in bonds, and we'll take care of it. All right, so just wanted to get that out the way. Now, big catalyst coming up. Okay, we've got jolts coming and we have the Fed minutes coming. Right, these are going to be a big deal. Then right after that, we have ADP, more jobs, and then CPI coming very shortly afterwards. So buckle up. Okay, it's about to be a roller coaster over the next week or two. We're starting the year off with a data bomb. Now, how could the banks have gotten this so wrong? All right. Besides what I just told you about cash, okay, and them trying to push the cash narrative and the bond narrative a lot, America was expecting a recession that never arrived. Well, not yet. Okay. So, there may be a recession coming in 2024. It may not come until 2025. Who knows? But everyone was expecting a recession, and we hit a all-time high in Google searches for recession last year. Okay, so much higher than the great financial crisis, much higher than COVID. Now, obviously, many more people are using the internet and using Google since these times, so you do have to take that into account. But at the end of the day, the numbers don't lie. Okay, and the Google trends for recession, everybody was looking for it. Okay, and everyone was expecting recession. And if you were to say that at the end of 2022, that, hey, 2023, there's going to be a recession, a lot of people would have agreed with you. Okay, myself included. 2023, when the year started out, did not look very good. Now, the U.S. has gone through 34 recessions since 1857. And what we're looking at is all of the pink lines right here are going to be recessions. And the whole point of showing you this is that while we do get more recessions, okay, and it's not like they disappear, I just want to show you guys how short-lived and fewer in between they are, right? You can see back in the day, we used to have recessions all the time, it seemed like, right? Every couple of years, it seemed like there was a recession, right? Every couple of years, seems like there's a recession. And then they really start to spread it out. Okay. And that's what we're seeing right now is overall, the US has just become more developed and it has a much stronger economy. And I know there's lots of problems, okay, with the US economy right now. We're not going to go into that. We're just going to go over some facts right now that, hey, listen, you know, while recessions still do happen and they can happen in the future and most likely will happen in the future, they are getting more and more spread out, okay? And things are not as bad as they used to be, right? As much as you hear about how bad things are in the US economy, it's not the worst it's been, okay? Now, of course, we'll break down TLT, give you guys a nice technical analysis, right? What we've been looking for in TLT, we finally got, okay? There were about three things that we're looking for, three signals, one right here, okay? One right here and another right here. So we're going to break those down in today's video if you're not familiar with them. And of course, if you're trading something like TLT, you need to be paying a lot of attention to treasury yields, okay? They're going to move opposite of each other. And this is the 10-year treasury yield. This is the most commonly looked at one. And if this bounces, that also could result in TLT dropping, and we're starting to get some of the same signals on TNX that we're getting on TLT, just opposite, right? We're starting to see some bullish signals. And of course, we'll talk about the SPY, S&P 500. We came up, hit those wave 5 targets, and we really haven't been able to do much since, right? We've peaked above, a couple times. There's some bearish divergence here. We'll go and break down everything in today's video. So be sure to smash the like button, subscribe to the channel for more. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys called Investment Intelligence, giving out free trade ideas and free valuable finance content every single week. I'll break down the trade idea, show you guys the chart, what it is that I'm looking at. Right, you can see and go back and check the website because there's also a website with it. Many of the trade ideas have worked out very, very well, and it's because I choose quality over quantity. So I'm not trying to spam your inbox every single day with 5 to 10 different trade ideas, trying to brag about one or two that hit. The most recent one was RTX. You can see I put this out December 28th, right? And we talked about the cup and handle. We went over the levels here. The cup and handle fired today. We came up and tested the second trend line here, but look at RTX this morning, okay? Absolutely skyrocketed. We have people hitting me up, asking me if I have it. It's telling me how their January call options are already up 88%. A lot of people took profit on those. I definitely took some profit on those. Still have a little bit left in the game. But when you see really big gains, there's nothing wrong with taking some profit and reducing some of your risk. And now, again, that's completely free. Okay, so you guys can sign up for that using the link in the description, or actually right now, I'm doing a New Year's sale. Okay, so happy New Year's. You guys can get into the Discord for $1. Okay, promo code New Year. That's all capitals. NEWYEAR. New Year will get you into the Discord for just $1 for your first month. And then it's only $10 a month after there. And you guys can determine whether or not you want to stay. That's where you'll get access to all my different analysis, all my different trade ideas, rather than just one or two a week from the newsletter. Now let's get into the video here and let's talk about gold. Okay, the reason I want to talk about gold is because everyone right now is, going on and on about a soft landing. Okay, soft landing. So what would gold do, right? There's a lot of gold bulls out here who are saying that gold's going to hit all-time highs, right? And gold's going to, go up a lot this year. I'm hearing 3,000 different numbers. Well, the big thing you need to ask yourself is, well, what happens if we do get a soft landing, right? Gold is generally seen as more of a flight to safety. Okay, so there are other factors included. So if we do get a soft landing, would a lot of people be looking for a flight to safety? No, they'd maybe be looking for more risk on assets. And if you take a look, the past two soft landings have resulted in flat returns for gold. So it's not like gold has to tank and go to zero or anything. But if we were to get this soft landing scenario, all right, that's not going to be extremely bullish for gold. So you want to position your portfolio based on what you think is going to happen and then what's developing as the year goes on, right? So if you're someone who thinks that there's going to be a soft landing, maybe gold isn't the thing that you really want to be going all in on, right? Just taking a look at the data again and taking a look at the past two soft landings, right? We can see that it's resulted in flat returns for gold, right? Now, what if you are long gold, right? Well, then maybe, this soft landing narrative, maybe you don't necessarily want to see that come out, or maybe you don't think that that's true. And again, you think that more people are going to flock to safety and you're going to see a little bit more of that. That would be more of a case for gold, right? Another one that you want to think about, and I know this is crazy, okay, especially even coming from me, is China stocks, okay? Baba, Baidu, Futu, PDD, JD. The Chinese sector. China's central bank has committed to further enhancing financial aid. All this is saying is stimulus, guys. Stimulus, 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 right? And oftentimes you want to find liquidity, right? And chase liquidity and chase stimulus, right? So I know there's lots of fear right now. I do have a couple positions in some of these Chinese plays. And they were looking really, really good. Today was really, really bad for China. So, we'll have to see how these things develop. But I do think that, China could be a little bit of a contrarian play, right? The narrative right now is very bad in China. Okay, I fully understand that. And things could get really worse, much worse in China. I do get that, right? But will that be the narrative 6 months to a year from now? Right? Or will it be, hey, China actually recovered, the stimulus worked. Why didn't you buy the dip when everything was at XXX price, right? And so that's kind of how you want to think about things, right? When everyone is bullish, maybe it's time to be a little bearish. When everyone's bearish, maybe it's time to be a little bullish. Now, it's not something to live or die by, but that's something to, use in your research, right? Well, oftentimes the market's not going to do what everyone thinks it should do. And so if everyone thinks that something should happen, I wouldn't be surprised if something different happens. Okay. And so that's why I want to bring China to you guys' attention. All right. Just because I think that there are some names in there that you can look at, and you'll just have to monitor the situation in China, manage your risk accordingly. Now, Bitcoin is also another one. Okay. Bitcoin has all the catalysts, the most important catalyst that it's had in years, right? All right. The ETF, everybody's been talking about it in the Bitcoin halving event. Okay. The halvings have typically led to all-time highs after halving, right? You have a halving, and you have all-time highs. You have a halving, you have all-time highs. You have a halving, and then you have all-time highs. We're approaching the halving, okay? And it's coming very soon. It also just so happens to be near when the ETF is, kind of when everything with the ETF is going to be happening. So we'll see how that develops. That's, pretty big coincidence on the timing, if you ask me. But Bitcoin, I think still has, I think Bitcoin can have a really good year. Now, does it have to start the year off strong? Does that mean that it's not going to be extremely volatile? No, right? We all know crypto is extremely volatile. It can drop 10%, 20% in a day. And you just have to, be comfortable or know that that's what comes with crypto. But, again, when we take a look at the halving effect on price, okay, it's very, very bullish. Okay, and it's coming up soon. It could be an initial sell the news event, just like the ETF. We may initially get a little bit of sell the news, get some profit taking from people who bought in early, right? So buy the rumor and then sell the news type of deal. But I do think that it could be bullish for Bitcoin, and I wouldn't be surprised if Bitcoin has another really good year. Now, one thing to think about: crypto and gold typically chase liquidity. All right, now they kind of move a little bit similar, not totally similar. Obviously, Bitcoin is more volatile than gold, but the one thing I will say is that if there's global liquidity, it's going to find its way into Bitcoin, and it's going to find its way into gold typically, right? You can go read the research on it, and look into that a little bit more. All right, and what I mean by that, but I really wouldn't be surprised if Bitcoin has a pretty nice year. Now, we've been seeing a lot more benchmark hugging. Now, what do I mean by that? Well, when this line goes up, we're seeing deviation from the benchmark, and when we see this line go down, we're seeing hugging the benchmark. What's the benchmark, right? That's going to be your S&P 500 basically. So you have active investors, portfolio managers, hedge funds, different things like that. When they're deviating away from the benchmark, what that means is that the S&P 500 is made up of 500 stocks, right? Well, their portfolio is looking more and more different and the more that they deviate away from the S&P 500. And this is basically them taking risk, okay? Because they want to come to their clients and they want to say, hey, we outperformed our benchmark, okay, against our benchmark, right, against the S&P 500. And if they're scared and they don't really feel risk on and they feel very risk off, they're going to hug the benchmark more closely, right? This way they can say, oh, well, hey, look, we basically, performed just the same as the S&P 500. So it wasn't really a bad year, whether it was minus 1% or up 1% from the S&P 500. They can go to their clients and save a little bit of face, right, by hugging the benchmark more. And then, as they deviate further away, it's because that they think that there's more opportunities in the market that may be, mispriced, right? Maybe something's overvalued, maybe something's undervalued. And so they want to deviate from the benchmark to, reflect that in their portfolio. And we can see right here, it went down. Okay. We've seen a lot of the hugging of the benchmark. And again, when we looked at those bank analysts predictions for 2023 and we see how much they were hugging the benchmark, believe it or not, 2023 was like one of the best years of ever in the NASDAQ. Like we're talking ever, like in the top 2 or top 4 or something like that. The NASDAQ went up 50% last year. Okay. And you're seeing this huge hugging to the benchmark, just not reflecting the total risk on. And if you ask your average person, it definitely didn't feel like last year, like 2023 was one of the most bullish and best years for the NASDAQ ever in history ever. I don't know anybody personally who thinks that and really feels that way, right? Now, this is the payroll index growth tracker. Okay, and payroll and jobs is going to be what's really important to the Fed right now. Okay, whether you believe or not, inflation has been ticking down. Okay, and so as of now, the fight against inflation looks like we are winning. Now, of course, anytime it can spike back up, but when you read a lot of company earnings reports and you hear them, what they're saying with earnings, that doesn't seem like it will be the case. We'll have to see if that continues. But payrolls and jobs is what's really, the focus now. Okay. Because the Fed doesn't want to see that recession happen. So, if we start seeing a massive uptick in unemployment, you best believe they're about to start cutting rates soon because believe it or not, they do want to avoid a recession, right? In 2023, it seems like they really wanted to cause one, right? They really wanted prices to come down and they really wanted the labor market to slow down. But what we've seen is we've had a resilient labor market, resilient job market, strong job market, and inflation was able to come down throughout that period. Now, what we've seen is that wages in average hourly earnings growth, okay, is ticking down, right? And so these are in a downtrend. And while this may be what the Fed wants to see, this can very quickly turn into a bad scenario, right? So right now it's sounding like a soft landing, like, oh hey, we're getting what the Fed wants. The labor market, payrolls growing down, wages going down a little bit. We're not getting that wage price spiral. That was something that was a really big concern. But if we just continue to see wage growth and earnings growth, just decline and decline and decline, that's not a good sign for us and not a good sign for the economy. So, you do need to pay a lot of attention to that. Now, one thing that really absolutely skyrocketed in 2023, obviously, was semiconductors and chips. And so the chart below helps provide some context and makes the case that the SOX, which is the semiconductor ETF, are a bit ahead of where they should be to the relative growth backdrop. So the blue line is your US ISM data, right? And the green line is the year-over-year returns in the SOX. And so you can see the green line is much higher than the blue line right here. And typically, whenever you see that, all right, we'll go to this period here and highlight it for you guys. Whenever you see that, all right, you do typically start to see it pull back and digress from that. Okay, now that also coincided with the blue line dropping here. Okay, so you're seeing your ISM data drop pretty hard. So, it may take ISM data dropping pretty hard for this to actually happen, right? It's not a guarantee, but you can see here how the chart goes is that, the semis did get ahead of themselves, according to this data set, right? Typically we see US ISM data, on top here above, and that's just not the case right now. We're actually in this time period again over here, where we saw that the semis were above and they quickly corrected themselves and had a very sharp drawdown afterwards. So that's something, if you're someone who's trying to short the market, and you're a bear, these are a little bit more of some of the fuel for the bearish narrative. Now let's get into TLT, speaking of bears, and I do think it's time potentially to start shorting TLT. Now I've been waiting. I really wanted to get in up here. Okay, I really wanted to get in right here, but I didn't really want to do too much over the holiday weekend, right? And over the holiday break. So the main things we've been looking at on TLT has been this trend line, okay? And there were three signals that we talked about. All right. The first one was breaking this initial bullish divergence trend line. Okay. If you're not familiar with divergences, bullish or bearish, we have a low, a lower low, and a lower low, right? So price action's making lower lows here. And then we have a low, a higher low, and a higher low. So each point where we have a low and then a lower low on the price, we have a higher low on the RSI, and then a lower low and a higher low on the RSI, right? So if that sounds like too much jargon for you, just take a look, downtrend, uptrend. Your RSI is your relative strength index. This is going to measure the relative strength of a stock, crypto, whatever it is that you're looking at, right? And in this case, a bond ETF. And this is an indicator that we could see some bullish activity, right? And sure enough, we ended up putting in a nice rounded bottom here, starting a huge uptrend, right? And we said, hey, if we break this bullish divergence trend line, you can see we bounced on it again over here, had a very strong push to the upside. We could start to see things change in TLT, right? And so the first signal that we were looking for was the break. The second was the MACD, okay? And so the MACD right here just crossed below. This is a bearish crossover. And we had a bearish crossover over here, led to a sell-off. There was a bearish crossover back over here as well, led to a sell-off in TLT. And so it's very possible, okay, that this daily MACD is yet again another good sell signal, and we could see TLT start to fall. Now, the Fed minutes are tomorrow. So I'm not looking to overly aggressive short, right? I didn't come in here and short TLT today either. Okay, patience pays, all right, and cash is a position. All right, think about it. What happens if the minutes come out bullish tomorrow, right? Or dovish tomorrow? Well, that's going to send bonds up higher, right? Because the market's going to price in more rate cuts, and that's going to cause treasury yields to drop, and that's going to cause bonds to go up, right? That's just the mechanics of how the bond market works. So, we have two signals here. The third was also breaking this initial trend line here. So we have, three signals here that the tide is changing. Okay. And, we basically held 98 today. 98 is that support level right over here. Below 98, it's going to be 97. All right. There's a gap fill right here. That's what all of these blue boxes are. Okay. So, there's a gap over here. It took forever to fill. We came and filled it. There was a gap over here, took forever to fill, and we came and filled it, right? And so if we take a look, we have 1, 2, 3, 4, 5 gaps down to fill on TLT. Now, I'm not saying TLT has to come all the way back down to 85, okay? That's not what I'm saying. That's not what I'm hoping for or wishing for. But if you're someone who's been long TLT on the way up, I mentioned to some people in the Discord, when we're over here, hey, this is a really good time to hedge, okay? And hedge your position if you've been long on TLT, just in case things start to pull back. And, if we break 98, we do have a little bit of support at 97. Otherwise, I think we're coming down to 95, more specifically 94.74 for the bottom of this gap fill. Okay. And so that's going to be a little bit more of my intermediate targets. Now, if we maintain 98 and we stay above 98, 101.55 is my next upside target. Okay. And that's going to be the next level of resistance. Notice how our 200-day moving average as well is starting to flatten out a little bit, right? So you can see it was in this downtrend. Now it's starting to flatten out a little bit, and it's basically hugging that 97 area here. So, if it can end up, if we come here and test 97, that's also going to be the 200-day moving average, and we could see a bounce, right? And we could see it continue its uptrend. So we don't have to come down into to 95 or to, any of these gap fills down below, but these are things that, you want to pay attention to and just kind of notice and prepare for, right? Like, hey, we just saw three basically signs of a trend change, right? We broke the trend line here on the RSI, getting a bearish crossover. We have a rounded top, a rounded bottom led to the rally. So you want to be cautious, right? And you want to prepare yourself so this way you're not caught blindsided or panic selling just because you see a couple red days or you see TLT drop a couple dollars. Now, this is the TNX. Again, this is your 10-year treasury yield. These are what you're going to be wanting to pay attention to, especially if you're trading bonds. Now, what I really like to look for is a 1-2 setup, right? And so what do I mean by that? Well, market tends to move in 3 or 5 wave structures. We won't dive too much into Elliott wave, but your 1-2 setup is one of the cleanest setups that you can find because wave 3 is typically the strongest and most impulsive wave. So we're starting to see a bounce here in TNX. If this was to pull back, okay, and hold some type of a retracement level, okay, then you would look for wave 3, right? And that wave 3 up in TNX could result in TLT dropping, right? And that's what would happen. So that's really more of the setup that I'm looking for right now, is to see, hey, can the TNX pull back a little bit? Okay, and if we see the TNX drop a little bit, then you can put on a really well-defined risk to reward strategy, based on the 10-year treasury yields, right? And if we do start to rally, I don't know exactly where it's going to top out at, but anywhere from 4% to 4.12, 4.187 to be exact, but right around 4.2. This is kind of the area where, I think that we can come. I don't necessarily think we're going to go all the way back up to 4.8. That would be a pretty hawkish Fed. Okay. If something like that happened and we were to fill this gap up here, that would take a pretty hawkish Fed. and we would really need to see inflation ticking back up and a few other things as well to really get that done. So not too worried about that right here. Us coming up and filling a gap around 4.8 is most likely going to result in TLT coming down and filling some of these gaps below 90, right? Around 87, around 85. That's when that scenario would play out, is if we start to see the TNX coming up to that 4.8 gap fill. Now, SPY. All right. SPY, we talked about markets moving in 3 or 5 wave structures. We had a very clean 1, 2, 3, 4, 5. Right. We actually bought the dip here on wave 4. Got it a little bit early, but you can't really time the bottom perfectly. I think we got in around here, and it was a very strong reversal afterwards. My favorite chart pattern of 2023 was the inverse bump and run, or just the regular bump and run. It's indicated by a prevailing trend and then an aggressive bump down in price. And I think you guys will really like that pattern in 2024. I definitely think it's one to learn. Here recently, we're starting to see some pullbacks. Guys, in my opinion, it's really healthy. Okay, it's healthy pullback. Now, to me, we haven't really seen anything worth causing some huge panic in the market. All right, let's just take a look at how aggressive this move was to the upside. Even if we were to come back and test 450, which is old supply, right? And then we broke through that supply. Even if we were to come back and test 450, that gives us the range for a higher low. If you notice, we've pretty much just only gone up in a straight line and haven't put in any higher lows, right? Here we have a low, higher low, higher low, higher low, all right? Or I guess over here would be a higher low. We can pull back to 450, we can pull back to 430, right? And still be in higher low territory. Okay. But at the moment, we did break a short uptrend, right? We have a very short uptrend right here, and we do have some bearish divergence, right? Bearish divergence is going to be the opposite of that bullish divergence, where you have a high and then higher high. So price is heading higher, and then you have a high and a lower high on the RSI. Now, keep in mind, if we break out of this bearish divergence trend line, most likely the SPY is going to head up to about 480 and potentially even higher, right? If we were to break out of this bearish divergence here. We've been overbought on the RSI for SPY for a long time. And so to me, it's finally just cooling off, right? To me, it just looks like it's finally cooling off. We could see some continued selling, some continued pulling back. It would make a lot of sense. At the end of the day, like I said, I don't think it's time to panic or think that, the bull market is over. If the S&P was to drop to 460, 450, like I said, even 430, it still all is room for higher lows, right? When we talk about higher lows, we talk about highs, higher highs, higher highs, where you have a very clear uptrend going on, right? And, typically after 5 waves to the upside, you would look for an A, B, C to the downside. And so that may be what we get, right? We may come down to 450, bounce, and then go back down to 430. We may, come down to, 470, right? Bounce, come down to 460. We don't know exactly, right? We can't really try to predict the future. You really just want to react to the price action, right? You want to react, trade, capitalize off of the opportunities ahead of you, in front of you. And if something's not clear, remember, cash is a position. You don't need to FOMO into things and really blow up your account doing so without a proper trade plan. So don't forget to sign up for the newsletter, okay? Completely free. You can get access to all of those emails, those free trade ideas every single week. Signing up using the link in the description. You can also use that link in the description to join the Discord. Promo code New Year, all one word, all caps, get you in the Discord for $1. Okay, so I'm not trying to, make a fortune off of this or anything like that. There's many plays that have been working out very well. All right, and the past 2 months, November and December, were extremely kind to us. You can see, people making lots of money in the Discord, all right, off multiple plays. So it's not like it's a one-hit wonder or something. And, I'd love to have you guys in there. That's where you get access to all the different trade ideas, not just 1 or 2 a week from the newsletter and all the different analysis I have. You guys can also check out Simply Wall Street. All right, there's a link too for that one. It's a really cool platform, right? So we did a lot of technical analysis in today's video, but if you're someone who likes fundamental analysis a little bit more, and you want to get, instant fundamental analysis on all your favorite stocks, on the stock market itself, right? This is a screenshot of the PE ratio for the S&P 500. It was 29 times. The 10-year average is 27 times. Right, you can take a look at total market cap versus earnings and revenue. and much more. It's a really great platform. I used them for a while before. I had a sponsor code for them, and so now I can actually get you guys a nice little discount using the link in the description. It's something that I think you guys will really enjoy, really benefit from. And if you ever feel like, you have some more questions, about some things from today's video, maybe you want to go over some of the day trading dynamics that I look for, or some of the swing trading strategies, or you feel like you need a little bit of some one-on-one time to go over some of the, different indicators that we talked about in today's video, feel free to hit me up on my Ko-Fi page. There's a link in the description there. You can click on commissions, and that's where you can book a 30-minute or a 1-hour coaching session, basically directly through that platform. You guys can also click on this buy a coffee button, basically as a way to leave a tip or donation for the free valuable content that I do put out, such as these videos and the newsletters.